Passive investing involves buying and holding a diversified portfolio of assets over the long term. Active investing requires frequent trading and attempts to outperform the market by identifying undervalued or overvalued securities. Index funds track the performance of a specific market index, providing low-cost exposure to a diversified portfolio. Exchange-traded notes (ATNs) are debt securities linked to the performance of a particular index or commodity. Hedge funds use complex investment strategies to generate high returns, often employing leverage and alternative investments. Private equity invests in non-publicly traded companies, aiming to improve their operations and increase their value. Venture capital funds early-stage businesses with high growth potential, typically taking on higher risks for potential rewards. Real estate investment trusts (REITs) invest in real estate, providing investors with exposure to this asset class. Commodities are raw materials, such as oil and gold, traded on commodity exchanges. Cryptocurrencies are digital assets, such as Bitcoin, using cryptography for secure transactions.